Imagine you're about to make a big purchase for your business, but you've got a nagging feeling at the back of your mind that you don't have enough cash to pay for it. Today, we're going to look at bank reconciliations and what to look out for to make sure they're correct, and how to communicate with your bookkeeper or accountant so that they can fix any issues you uncover. Hi, my name's Anne Plummer and welcome to my channel, CFO Value Unleashed, where I show you how to collaborate effectively with your bookkeeper and accountant and your CFO so that you can drive more growth in your business and achieve your financial goals. Let's get started. The three main reports are the balance sheet, the profit and loss, and cash flow. Today, we'll be looking at a component of the balance sheet up in assets, in the current assets, and that's where the bank accounts live. A bank reconciliation is just when you compare the information at your bank with the information in your accounting software, whether that be Xero or QuickBooks. And what we're looking at is that the transactions in one match the transactions in the other, especially the closing balance. That is the final figure at the end of a period of time. In your accounting software, unless every single cent is reconciled, it's not reconciled. That's why accounting software gives your accountant or bookkeeper a big dopamine rush once the bank is reconciled. Your first action item is to get a bank statement from your bank, either in PDF form or a hard copy. Why? Because the closing balance can't be changed, whereas the transactions and closing balances in your accounting software can be changed. Don't forget to choose your opening and closing balance dates carefully. Take action and sign into your accounting software. This is what the Xero dashboard looks like. Note that this is a sample company for demonstration purposes with sample data. And this is what the QuickBooks dashboard looks like. And we're going to zoom in on the bank accounts on the dashboard. Here you see what the current balance is in Xero. And the second number is what the latest bank statement balance is, whether it's been manually imported or if it's come in automatically overnight directly from your bank, which is called a bank feed. You can see here the two figures don't match each other on the screen, but you can see that there's still an item that has to be reconciled. So get your bookkeeper or accountant to reconcile this figure. We're not even going to look at the PDF bank statement yet. Let's keep it simple because there can be timing differences, especially if your bank is feeding the bank statements to you daily. If there's just one number, it looks like this. And everything is reconciled and up to date. That doesn't mean it's correct. Back to the dashboard, and this time we can see that the two numbers are different. And it looks like everything's been reconciled. Let's have a look at the bank reconciliation report now, and we might get the answer to why these two figures are different. To generate a reconciliation report in Xero, just come up to these three little dots, click, and to the right, just scroll down a little bit, and here's the reconciliation report. To keep it simple, all we're interested in is this bank reconciliation summary. If you need to change the dates, change them and then hit update. Here we can see that there's been a transaction entered into the software, so a payment to ABC Furniture. The only problem is someone has forgotten to actually process this payment at the bank, and that's the cause of the imbalance. So the thing to do is to talk to your accountant or bookkeeper so that they can look into it and resolve these issues. The third and final report you need is the balance sheet. So just come up to the top here to accounting and select reports. Once you're on the reports screen, come up to the top here in the search bar and type in balance sheet and then select it. Once the report's generated, you need to change the date to the date you want and then hit update. So in summary, you've just got to make sure that that closing balance you've got on your bank statement that you printed off from the bank is the same closing balance as on your reconciliation report and also on the balance sheet. I hope you found today's episode useful. Let me know in the comments and I'll see you next time.